Welcome back to the channel, guys. In today's video, I'm going to be going over my September 2023 dividend income, and I received 17 paychecks, and I also received a new record. And at the end of the video, stick around. I'm going to show you guys how much money I spent in the month of December, and I'm going to compare that with my monthly dividend income from September. Then I'm also going to show you my average monthly expenses and compare it to my average monthly dividend income, so you guys can see how much of my bills or my expenses my dividends would pay for on a percentage basis. So guys, let's get right into this. My portfolio is currently at $49,909.67. I'm down on the year quite a bit, but I've been earning those sweet dividends. So let's check them out. All right, on September 1st, I received $5.86 from American Waterworks. Then on September 5th, I received $12.85 from Pfizer, putting me at $18.71 for the month. Then on the 6th, I received $16 from the Southern Company, putting me at $34.71 for the month. And then on the 7th, I received $6.16 from Johnson & Johnson, putting me at $40.87 for the month. And then on September 8th, I received $2.74 from Costco, putting me at $43.61 for the month. And then on 9/11, I received $11.93 from IBM, which put me at $55.54 for the month. So let's go ahead and check out those stocks. So starting off, American Waterworks, I have a little over $1,000 in this company, 8.28 shares at an average share price of $155.10. And their current price is $123.83. So I am down quite a bit on this stock, over $30. And they do have a decent dividend yield at 2.2%. And I want to say they have good dividend growth rate. They usually raise it about 10% every year. So that is a solid dividend growth rate. And I still believe that this is a great stock to own, especially in recessions, because we always need water and water companies. So next up is Pfizer. I also have a little over $1,000 on this stock, and I am down quite a bit. I believe this is one of my second worst performing stocks after Dollar General. I do own $31 or 31.34 shares at an average price of $35.65. Although, as you can see, the price is only $33.17. So I haven't lost that much. And it does have a really high dividend yield of 4.91%. So that's something to look at because I still believe Pfizer is going to be a great company. And perhaps they've been down so much just because the pandemic is over and the stock shot up and now it's just coming down to normal levels. But I do still believe that this company is a great company to own. So next up is Southern Company, which I have just under $1,500. And if we scroll down, I have 22.85 shares at an average price of $57.14. So this one's actually up. The current price is $64.72. And it has a great starting dividend yield of 4.26%. And they usually have pretty decent dividend growth rates, anywhere from 4 to 6% a year. But I mostly keep them because they're a utility company. They're a great company. They have that great starting yield. And then they do give some growth throughout the year. So next up, I have Johnson & Johnson, one of my favorite healthcare stocks. Definitely an amazing recession-proof stock. They have I have $805 in this stock at 5.17 shares. Average price of $144.14, which means I am up because the current price is $155.75. And they have a good starting dividend yield of 2.94%. And they usually raise their dividend around 5% every year. So I still think this is a great stock to own. Next up is Costco, one of my favorite stocks. And honestly, I believe Costco is a great recession-proof stock as well. I have just over $1,500 in this company. I have 2.68 shares at an average share price of $401.11. And this stock has gone up a ton. Currently I have $564.96 for the price. And they do have a low dividend yield at 0.68%. However, this company has, as you can see, amazing growth and amazing dividend growth. Next up, I have IBM with just over $1,000, and I have 7.18 shares, an average price of $120.21, and a current price of $140.30. So IBM used to be a stock that was always negative for me. Now I'm in the green on this stock, and they do have a great starting yield of 4.72%. However, their dividend growth is really bad. I believe they've only been raising their dividend about 0.6%. But I'm going to keep holding on to this stock because they do have a high dividend yield and they do give me a good amount of cash every quarter. The next, we're going to go over to Home Depot where I have just over $1,200, 3.99 shares at an average price of $287.40. The current price of $302.16. So I am up on this stock overall. And they actually have a really good starting dividend yield, 2.7%. And they also increase their dividend at a great rate. And I believe Home Depot is a great stock as well. Next up, on September 14th, I received $8.35 from Home Depot and $3.45 from Microsoft. And that put me at $67.34 for the month. So if I go over to Home Depot, I have just over $1,200, 3.99 shares at an average share price of $287.40. And it has a current price of $302.16. So I am up on this stock. And they do have a good starting dividend yield of 2.7%. And they also have great dividend growth. So next is Microsoft. I have $1,600 in this stock, 5.06 shares, an average price of $221.07, and a current price of $315.75. Once again, this is another stock with a low dividend yield of 0.8%, 0.86%. However, they usually raise their dividend about 9.8% every single year, which is phenomenal. And Microsoft is one of the best companies in the world. I definitely believe you should own this stock if you don't already. On September 15th, I received 3 dividends, $8.35 from Kellogg's, $9.59 from O Realty, and then $6.98 from Stag, which puts me at $92.26 halfway through the month. So I have just over $800 in Kellogg's for 13.92 shares at an average price of $63.89 and a current price of $59.51. So I'm down a little bit on the stock, and it does have a good dividend yield of 3.98%. And I do love my safe food companies. Next is Realty Income. I have just under $1,900, 37.52 shares at an average price of $63.49 and a current price of $49.94. Now, this is a stock that is getting beaten up by the high interest rates, and it currently has a dividend yield of 6.03%. But I believe O Realty is one of the strongest REITs out there. They've been through multiple recessions. They've been through a lot, honestly, and this stock is still going. So this, I mean, this is a really high dividend yield. I think I need to start throwing money into O Realty. I know I keep saying that, but this time I mean it. That dividend yield is just too high to pass up. So next is Stag. I have just under $2,000 in this stock. Average price of $56 or average shares 56.95 shares. Average price of $31.83 and a current price of $34.51. So I'm up a little bit on this stock. And they also have a great dividend yield, 4.25%. However, Stag's dividend growth is not very great. They've been raising it by 0.7%, but I don't remember seeing dividend growth for the year of 2023. Still have a couple months, but I'm not going to hold my breath. All right. Next up, on September 18th, I received $13.09 from Duke, which puts me at $105.35. And then I received on September 22nd, $1.86 from Waste Management, which puts me at $107.21. So I have just over $1,100 in Duke Energy Corp. I have 12.77 shares at an average price of $88.32, and their current price, $88.26. So I really haven't lost much on this stock. And they also have a high dividend yield at 4.58%. Just like Southern Company, it's a great energy utility company to own, and they do have decent dividend growth, but it's that high dividend yield paired with the stability of the stock is why I own it. Then next up, we have Waste Management, which is one of the best recession-proof stocks because you always need your trash and recycling taken out. I have just over $400 in this stock, 2.65 shares at an average price of $151.65, a current price of $152.44. So I'm up a little bit. They do have a low dividend yield of 1.77%. However, they usually have around 7% dividend growth, which is right on target. So this is a great stock that I would definitely recommend picking up. And finally, moment we've been waiting for, September 25th, I received $138.57 from SCHD. That is the highest dividend I've ever earned. The previous record was the last time I earned a dividend from SCHD in June. And so this puts me at $245.78 for the month. If we go to SCHD, I have $15,159 in this stock. And then I have 214.23 shares at an average price of $73.30, current price of $70.76. So I am down on this stock. However, the dividend yield is currently great at 3.7%, and they've been growing their dividend anywhere from 12 to 15% year over year. That's why this is one of my favorite ETFs to own because of their high dividend yield. Even when their dividend yield was 3 to 3.3%, it was great, and they have amazing dividend growth. So definitely an ETF I always recommend owning. Now, finally, at the end of the month, I received $4.83 from Avgo, $22.82 from DRL, Digital Realty Trust, and $8.87 from Pepsi. And I will reveal my dividend record after I review these stocks. So in Broadcom, I have $872, 1.05 shares, average price of $615.73, and a current price of $830.58. As you can see, this stock just shot up in value. And they used to have about a 4% dividend yield, but because they've grown so much this year, they have a 2.16% dividend yield, and they have incredible dividend growth. When I bought it, their 5-year dividend growth CAGR was around 28%. So even if that drops in half, they still have phenomenal dividend growth for a great company as well. So for DLR, I have almost $2,300, 18.7 shares at an average price of $103.92. And this is a REIT that's actually grown in value. Current price $121.02. And they have a great dividend yield at 4.03%. And they also have great dividend growth. So finally, we have PepsiCo, just under $1,200. I have 7 shares, average price of $142.52, and their current price of $169.44. Their dividend yield is 2.78%, and they usually have a 7% dividend growth rate, which is right on target. 7% dividend growth rate on average means that your dividend income is going to double every 10 years, which is a great metric to have. So now I want to go over to my dividend growth chart to show you that I earned $282.30 in the month of September, which beats my previous record of $275.52 in June. And then if we come over here, my average dividend income for the third quarter was $152.44. My current dividend income for the year is $1,534.72. And if we take my expenses for September and divide them by my dividend income, or if we do that the other way around, we take my dividend income, divide it by my expenses for September, which my expenses were $2,414.75. So my dividend income for September would have paid for 11.69% of my expenses, which that's over 10%. So I would think that's pretty amazing that it can pay for that much of my expenses. Now, if we take my monthly expenses and divide that by the average monthly dividend income for the past quarter, you can see that I spend on average $2,465 and let's say 56 cents a month. So my current 3-month average for dividends, which is my most accurate monthly dividend income, it would have paid for 6.18% of my expenses, which it's not over that 10% mark, but still having my dividends be able to pay for 6.18% of my expenses is still significant. Anything over 5%, I would say is significant. And then this $1.76, that's just taking my dividend income, dividing it by 160 hours in the month. So if I only earned dividends, I would have made $1.76 an hour. Not quite over minimum wage, but it's still awesome to earn passive income. So guys, thank you for watching this video, and I will see you next month.